Hey, good afternoon, everyone. My name is Jeanmonod, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep dive into our bank statement program. We'll get started here in about another minute. We'll let everyone log in. I'll introduce our two subject matter experts, and hopefully today we'll inform you and help you close more loans throughout the rest of the year and into 2024. Hope everyone's having a great day. We were just mucking it up before we got on, before we went live, so we're all fired up. So hopefully have a great day today. Give it about another 30 seconds. Got a lot of people still logging in. Appreciate everyone taking the time out of their day. And I appreciate our two subject matter experts. Moving a few boxes around here. This is going to be recorded. And if we don't get to all your questions, we will get them out to you. We usually do it next day. The person who usually sends this out is not here today, so we'll get it out to you no later than Monday. So, but I will, if we don't get any of your questions answered, I will provide my email address. So if there's questions you need answered immediately, email me, and I will make sure your account executive reaches out to you. So we'll take care of that immediately. Get started here in about 10 more seconds. Let me pull up this. Too busy mucking it up than being organized here. So, all right. Hey, good afternoon, everyone. We're going to get started here. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep dive into our bank statement program. We're going to talk about highlights of the programs. We're going to talk about what we want to see on a 1003. We're going to talk about our business questionnaire, thanks to Oscar. We're going to talk about our business questionnaire and how important that is as part of the process. And we're going to talk about the credit, what we want to see on a credit report. And then we're going to talk to you about pricing. And then most importantly, our marketing portal and how we can help you grow your business. So without further ado, I'm going to introduce Christy Best. Christy, please say hello, who I'm honored to work with, who's in our San Antonio market.
Hello, good afternoon. Yes, my name is Christy Best, and I am the account executive covering the greater San Antonio area.
Thank you. And then a familiar face here is Oscar Ungo. Oscar, please introduce yourself.
Good morning and good afternoon, everybody. My name is Oscar. I've been with the company for 6 years now, and I'm part of the inside account executive team. I'm really excited for everybody that's on this call today because we're going to be discussing the largest underserved market in the non-QM space, which are self-employed borrowers. So by the end of the call, you're going to know how you can help a self-employed borrower, how to pre-qualify that borrower, and where you can find customizable marketing content to reach out to those potential borrowers.
Yeah, great stuff, Oscar. So before we get into the program, though, we're going to launch a poll here, and the poll is, here we go. The poll is, who has originated a bank statement loan in the last 12 months? And while Oscar was talking about an underserved, and we have this right on our website, I'm going to talk to you about how underserved they are. In 2021, new business applications grew by 24% over 2020. That was the largest increase in over 10 years, new business applications. And in 2022, new business applications grew by 22% over 2021. So this is the fastest growing segment of that underserved borrower. So let's see our poll results. Okay, so 65% have not originated a bank statement loan in the last 12 months. So thank you for participating in the poll, and then thank you for being on this webinar, because we're going to help you grow your business. So so let's go into it. Christy, let's cover highlights of, we have two bank statement programs. Let's cover Bank Statement Elite here, Christy.
Okay, perfect. So the Bank Statement Elite program, I know it says there, Business Bank Statement Elite. We have a lot of enhancements that are happening all the time. I do want to point out that this is available for either business or personal bank statements. With the business bank statements, they need to be at least a 50% owner, and with the personal bank statements, they need to be at least a 25% owner. So The minimum credit score is a 660 and the max LTV is 90%. In order to go to 90%, you do need a 720 score. And our loan amounts, we do love large loan amounts here. So loan amounts are allowed up to 3 million and minimum loan amount is 150,000. I like to kind of point out here that 30% of the loans we fund don't meet our guidelines, that we do have a lot of movement with these, but the minimum loan amount is one of those areas that we do stick very strictly to. So minimum $150,000 loan amount, again, maximum 3 million. You can use 12 or 24 months of bank statements. This program does offer improved pricing with 24 months. So I always suggest starting with the 24 months bank statements, and then we can make a decision on what's best from there. I know Oscar is going to talk about our regular bank statement program. On this particular program, we do require 48 months out of a foreclosure, deed in lieu, or bankruptcy. Again, this is the elite program, so we'll be looking for that little bit of cleaner credit with less offerings on delinquencies. Our rates are going to be 30-year fixed on here. We do, again, another area that we stick very tightly to is going to be the 2 years of self-employment. I think most of us have seen a little movement there, maybe sometimes around 21, 22 months, but that's an important question to ask. It's usually the first question I ask on a bank statement is how long that borrower has been self-employed. We can do these on a purchase, a cash out, or rate and term. Important to point out there that cash out can be used towards reserves on a cash out. 40-year interest only is available on this program. And I'm going to kind of just tee off the expense ratio when Oscar will go through that when he goes through the bank statement questionnaire. That kind of covers the highlights on these. Another thing I think is really important to quickly mention on a bank statement is that we do look at the credit score of the primary wage earner when we're pricing these, which is going to be different than conventional. So that's a detail that I find helps me out a lot in the bank statement loan. So we do use the primary wage earner's credit score to qualify, not the lower of the two.
Perfect. Yeah, so as Christy mentioned, we do have another bank statement program. So I'm going to turn this over to Oscar. Oscar is really just going to talk about the differences between that bank statement elite and the regular bank statement. So go ahead, Oscar.
Well, like Christy mentioned, it is the bank statement elite option is an enhanced option for those credit-worthy borrowers. And one of the key differences that we see between elite and the standard program is that on elite you can achieve up to 85 LTV if they credit qualify for an investment property or second home, versus the standard option where we're capped at 80% LTV for an investment property or second home. But yeah, like Christy mentioned, there are more flexibilities on the standard option when it comes to credit. We're okay with mortgage late and getting exceptions for those. When the LTV is 85% or less, we can do up to a 30-day late. And speak to your account executive if you have a client that may have more than that, to check and see if they have compensating factors for any sorts of exceptions. When it comes to the DTI requirement, a recent enhancement that we have is DTI at 85% or less is 50%, and any LTV above 85 up to 90 is 40 on the front end and 50 on the back end.
Great point.
So that offers a lot more flexibility and helps your customers obtain a loan. It streamlines the process for us. Another difference would be for assets that are seasoned. We will source or season for 30 days as opposed to elite where we source or season for 60 days.
Yeah, great points, Oscar. Just a reminder to everyone, this is interactive, this is live. This is interactive. So we're going to get to your questions in the queue, ask away. We have someone also answering them, not only here in front of you, but also behind the scenes also. So Christy, let's talk about the 1003. What are the most critical parts that you want to see? Because what happens a lot is people play with DU, LP, and that's the 1003 that gets sent over to us. So kind of tell us what's the most important parts that you want to see and are critical to you making a upfront, basically a pre-underwrite decision. So what helps you, Christy?
Yeah, I think the big thing here is to remember that the 1003 tells the story of the borrower, right? And really what we want to see is a complete 1003, because as Oscar mentioned, sometimes we'll be looking for exceptions, and having a complete 1003 allows us to know what some of those compensating factors may be. If we have very little information on the 1003, then we don't have anywhere to go from there as far as, asking for exceptions. So we really want you to keep in mind that that tells a story for us. We want a complete 1003. We want all of the information there to be filled out except for the income. We ask that you leave the income portion blank. We probably ask that question and remind you of that a lot. It's an important piece of this because we want to use the income from the bank statement calculation. And sometimes it can inadvertently get the tax return, income on there. I have yet to see a loan, where there is more income in the tax returns than in the bank statement. So we want you to go ahead and leave that income portion blank. Make sure that the rest of the 1003 is complete, that the self-employed box is checked. And if we're going business bank statements, then we need to see the name on the 1003 for the business matching that of the bank statements.
Good point. Yeah.
Did I miss anything, Oscar?
How'd she do, Oscar?
Excellent, A+.
All right. So Oscar, before we get into, and this is where we're going to answer, I think it's Paul wants to talk about trade lines, and we're going to get to that in a minute, Paul, because, as Christy says, the 1003 tells the story about the borrower. One of the things that's really critical, Oscar, right? I'm going to pull this up so everyone can see this, is the business questionnaire, right, Oscar?
Yes. So this questionnaire you can find directly on our website. And, there are pillars, I call them the pillars of a bank statement loan. There are standard questions that you want to ask your client in order to know whether or not you should take the application at all, right? The key question there, Christy highlighted originally, is we require 2 years in business. So you want to ask that question whenever you're on a call or in front of your customer, just to, number one, check that they check off that box. The other questions impact income and how we calculate it. And we make that very easy to make sure that we can streamline the process of calculating your income. One of the advantages of working with Angel Oak is that we're going to review your 1003 and your credit report. And then we have a department that's going to calculate the income for you. So you don't have to go line item by line item calculating all deposits. You submit the 1003 and the credit along with the bank statements, and we're going to calculate the income within 24 hours. And once that's back, your AE is going to check the 1003 and credit to see if your borrower meets the initial requirements. And if they do, then we will send you what I like to call your findings. We call it your quick qual. And that'll list it'll list rates, it'll list the terms, and it'll also have a needs list so you know what to collect from your client to prepare your loan to submit to underwriting. But back to this questionnaire, the two key things that are on this questionnaire that impact income and to get your income calculated are the percentage of ownership. And so you can see there's a space for the percentage of ownership. And now if you scroll down a little further, you'll see that there's a place there for the business expense ratio. Now, what is a business expense ratio? Well, every business has expenses, right? And so as a standard, when we're calculating income off the bat, because we don't know what every business expense is, we give every business 50% gross profit. However, this questionnaire is here so that your client can tell us if their business expenses are less than 50%, what that percentage is. Now, if it's less than 50, and let's say that we use a realtor as an example, someone that may be 1099, well, they can have expenses less than 50%, and the floor that we can go down to is 15. So if they were to say that their expense ratio was 20%, your AE and you would estimate income based off of that. However, any expense ratio less than 50 does have to be verified by either an accountant or tax preparer. You can expect that condition in underwriting. But this is definitely going to help us. This helps us calculate income quickly and streamline the process from for you to get your loan disclosed and into underwriting.
Yeah. So we just wanted to show this. We haven't done it in the past on previous deep dives into bank statement, but this, in addition to what Christy's saying about the character of the telling us the story about the borrower, this gives us the story about the business. So Oscar, let's get to Paul's question here. What's minimum trade lines? What do we, open, active, inactive? So let's talk about the credit.
We need 3 trade lines reporting for 12 months or 2 for 24.
And then what did we just change, Oscar, about activity in the last, we used to have, they had to have activity in the last 12 months, but now we don't have to have that activity in the last 12 months. It just needs to be open.
Correct.
Which I've actually have talked with account executives over the last 2 weeks that has saved a couple deals there just with that. So I think that's critical. So hopefully that answers Paul's question here. So let's start getting to some of these questions. So Paul, hopefully that answers your question. We're going to talk about 1099 in a minute. We'll get to that. And then Oscar, let's talk about NSFs. We've got Pedro here is asking about NSFs. What do we allow?
NSFs, 6 in every 12-month period.
Yeah. So what, and then one of the things we always talk about is 30% of the loans we close here at Angel Oak are exceptions. So that's one we usually get exceptions on, right, guys?
Mm-hmm.
We, if the NSFs were in months 10, 11, or 12, and they've had none in months 9 through 1, you were probably going to get that exception. So again, Oscar mentioned this, it's critical to talk to your account executive because we've got seasoned account executives here and they know what kind of deals Angel Oak has the appetite for. So let's look at supply. So Christy, you might have to look because we've changed some things and Oscar mentioned it earlier. Do we allow bank statements for second homes and investment properties?
Yes, we do. And in fact, on the bank statement elite program, you can take a second home or a non-owner to 85%. And I think that that's really an underutilized bucket that really could benefit just make a note on that, 85% on second homes and investments on the elite program.
Great. So Oscar, let's talk about Paul. Paul's going to be our most active person asking questions tonight. And I love it, Paul. So thank you. So Oscar, give us a couple of scenarios that we'll do. What's the difference between using personal or business? And what about multiple businesses?
All great questions. So when collecting statements from your client, you want to make sure that you ask them to give you the bank account where they're depositing the most monthly business income, whether that be a personal or business checking account. I mentioned the expense ratio, the expense factor. There is a way for that expense factor to be waived. And that is when you have a customer who has a personal checking account and a business checking account, but they're paying themselves from their business to their personal checking, and we can see those transfers. We are okay with the expense ratio being 0 there because we can see the money flowing from the business to the personal. The logic is your business expenses come out of your business checking account, and what's going into your personal checking account is your take-home income, right? So that is one scenario. Another, well, let's say that you have a client who operates 2 accounts where they do not commingle money. They deposit funds into both accounts. We can make that exception as long as they are not moving money between the 2 accounts. Or maybe you have a customer who has 2 separate businesses. So they have 2 separate checking accounts for those businesses. We can also use up to 2 businesses on the program. I'm going to throw a third one at you. What if you have a client that is self-employed? Could be a realtor. I'm going to use a realtor again as an example because we see a lot of real estate agents that are borrowers on bank statement loans. But if you have a real estate agent who's a client who, they're 1099, they're self-employed, but they also happen to have a W-2 job they've had for 2 years. Can you use that W-2 income or any other income like pension income or Social Security income? The answer to that is yes as well. You just have to make sure to list that on the 1003. That way your AE can see it when they're reviewing your file for pre-approval. So all of those are examples, and we can also have a co-borrower that is W-2 and a borrower that is self-employed that needs a bank statement loan. We will use the W-2 income for the co-borrower. We'll ask for pay stubs and underwriting as well, but we will not ask for tax returns.
Yeah, Oscar, I think that's key, especially in today's economy since COVID. People picked up a side hustle, right? Whether they, so they call it that giga economy, right? It's,
Yeah.
so, and that is part of that underserved market we talked about. The statistics are showing that is not slowing down. And guess what? Those stats I threw up from 2020 and 2021 and 2022, those people are seasoned enough now to qualify for our bank statement program. So, get working on that. Christy, one of the questions I have here are, when we do a pre-qual, and the great thing about this, Christy, we're doing this income up front. That's the income being used throughout the entire process, right? Can you do a pre-qual for a TBD?
Yes, and absolutely, and we prefer that. And really the goal is to get that income calculated up front so that your borrower knows exactly what their buying power is before they go out shopping, right? So that has them in the right price point of the property that they can afford.
Christy, I always hear you say this, and Oscar obviously says it also. All of you say it. If you got their tax returns, if you are meeting with a self-employed borrower, right? Get their tax returns, try and go down that path. But while you're meeting with them, get the bank statements. It doesn't, Oscar, what does it cost for us to do a pre-qual?
It's free.
Yeah, so we'll do a pre-qual for you while you're trying to calculate those tax returns. And I always say you could give tax returns to 10 different people and you're going to get 15 different calculations. You give bank statements to us, you're going to get one calculation, and that's the one that's going to be used. And I know, Christy, you do a lot of realtor presentation. You're going to increase your borrower's purchasing power by 3, 4, maybe even 5 times as much. And in today's market, with inventory being so tight, my God, the luxury houses are the ones that are maybe a little bit more available than, your $250,000 to $500,000 range. So I think you could do your borrower and your referral source a huge, huge benefit. So let's start. We're 25 minutes past the hour. It's got more questions. Great questions coming in. I'm going to show Cynthia asked where do we get the business questionnaire. So Cynthia, from our homepage, we've got resources up here in the corner. Click on resources, and everything you're going to want from Angel Oak is here. Your AMCs. We don't spend time usually on this on our webinars, but I do want to show this. You have e-sign instruction, loan submission documents, mortgage e-clause. We always get calls about that. And then other documents. We have our condo questionnaire. We just did a webinar last week on non-warrantable condos. You have a bank statement questionnaire. This is where you get this. All this information is here. So just wanted to deviate towards that. Let's go. So hopefully, Cynthia, that answered your question there. Couple of other questions. Christy, let's talk about, I mentioned it briefly, but how long does it take to get the income calculated these days and to do a pre-qual?
Yes, so if we get that complete 1003 and all of those bank statements on the initial submission, which is what we're looking for, we're going to ask you for a copy of the credit report, the 1003 and 12 to 24 months of bank statements. We're going to be able to turn those around to you in about 48 hours. Because we do have to wait for that income to come back from the calculation team, but we're turning those around in about 48 hours right now.
Yeah. So hopefully, Melissa, that answers your question regarding turn times. The turn times are the same, Melissa, for TBDs and actual properties on the 1003. So, but like Christy says, don't wait until you realize that the borrower who told you they made $10,000 a month, and then all of a sudden you got their tax returns and they actually only make $4,000 a month. Don't wait for that. As I mentioned, get the tax returns. If you know they're self-employed, get their bank statements and go down those parallel paths. So, Oscar, Roman's asking about reserves. What do we require for reserves, and what do we use for reserves? I know Christy mentioned cash out. We can use that towards reserves, but kind of go over what we need for reserves.
Well, that's a great question, Roman. The minimum reserve requirement is 6 months on the subject property only. Like Christy mentioned, we can, if it happens to be a cash out, we can use the cash out to satisfy that reserve requirement. Reserves can come from a personal checking savings. It can come from the business checking account. It can come from a 401k, or other retirement accounts that they may have.
Yeah. So thank you, Oscar. And John Eric has a question here that I think 100 AEs would be running over. We put together 100 realtors for a webinar. Would we be available? Yes, I'm in. Yes, I'm in. So, John, I'm going to share everyone my contact information, and I'm going to tease you to the end because we're going to talk about marketing. You know, we talk about an underserved borrower and an underserved market. We're going to talk about a very underutilized portal of ours for marketing, and it's also free. So, Oscar, without further ado, let's go into, we're still going to answer questions here. Let's go into 1099, Oscar, because as this world is changing, a lot more people are going to 1099. So, Oscar, cover our 1099.
Yeah, the 1099 option is, it uses the standard requirements for the bank statement program. The difference is it's an alternative income source for those people that are Schedule C, right? So the 1099 option is meant for someone who is 1099 with a company for 2 years. It's not meant for that person that's 1099 with several companies for 2 years. If you happen to have the latter scenario, then a bank statement loan would benefit them more than the 1099 option would. There are benefits to the 1099 option that can help clients qualify. So one of those benefits is with the 1099 option, we do require year-to-date earnings. So most customers that are 1099, the person that is paying them the 1099, they are set up with either Paychecks or ADP or a big payroll company, and they have a year-to-date earnings report of what that client has been paid. How does that help? Well, we mentioned NSFs on the bank statement program, which we see on using the bank statements. Well, if we have a year-to-date earnings report, we don't see those, right? If it happens to be a borrower that's 1099. So that's one way that we can help close more loans. Another benefit to the 1099 option is just the amount of people that are self-employed that are Schedule C. Sometimes they're using a personal checking account, but you may have another person listed on that personal checking account. On the personal checking account, we do require anybody on the account to be on the loan. So if we're just looking at 1099s then and a year-to-date earnings statement, then we can just use that sole borrower.
Yeah, and I think, I don't think there's one non-QM deal which is the same as the other. And I think that what's critical, and you can see it from our subject matter experts, the quality of the account executive here at Angel Oak. They know their stuff. They've been seasoned here. They've closed a ton of loans. And, as I said, there's no two loans probably are the same, but they can start you through the path of getting to understand how we can close that loan. So Nestor, as Christy mentioned, the 1003, we want it to be a complete 1003, right? The only thing we don't want on there is income. So we want, as Christy mentioned, if it's a TBD, that's fine. The job, how long they've been on the job, right? Or how long they've owned their business. In this case, we don't want income, but we do want, assets. We want the schedule of real estate listed there. We want the declarations filled out properly. That helps us. And as Christy says, that tells us the story behind the loan. So Nestor, yes, we want a completed 1003 just with no income. So Christy, talk about interest only, because as these self-employed borrowers are very, fluid month to month sometimes, talk about interest only and how that works.
Yeah, so we do have an option for the interest only, which allows for the first 10 years in the period of that loan to be an interest only payment. It's a simple payment to calculate. And especially on the higher loan amounts, which we see, John mentioned that earlier, typically what we see, borrowers that are buying the $750 million homes are self-employed. They're not usually your W-2. But, that does make a difference. That interest only does lower that payment. And, most of the time, I'm sure all of you right now have moved away from selling interest rates and you're really selling affordability of a payment. At least I hope that's what you're doing. And you'll find actually that the self-employed borrowers are very receptive to that. These are borrowers who have been told no a lot. And they are not, at least in the experience, when I get the feedback I get from my loan officers is, as they enter this space, they realize they're not getting beat up as much about the rate, you know, that 1/4%, that 0.5%, because you're saying yes to somebody who's been told no over and over again. I know that wasn't your only question, John, but
No, I love it.
do like the
I love
answers
it.
only.
You know, we've seen refinances go down. You know, we're cash outs are popping up. So yes, we will do cash out. You know, I know we talked about it, purchase, rate and term, cash out, delayed finance. We're seeing a lot more cash outs these days to consolidate debt. There's $1 trillion in credit card debt. There's a 1.5 trillion in student loans coming due. A lot of people are going to start wanting to tap that equity that they do have in their home and consolidate those bills. The other day, someone told me a Macy's credit card is 31.47%. That's making hard money look good, right? I mean, that's crazy. So when you know, Barry Habib said this at a sales conference about a month or two ago. Instead of being a mortgage advisor, be a debt advisor now. You know, you really can help people really consolidate debt and help their financial position out and solidify that relationship with that borrower. Couple other questions. Do you require a 1099 for 2 years, Oscar?
1 or 2 years. So we can look at the most recent year, the last 2 years.
So Oscar, go into that. So Christy mentioned it. Get us all 24 months of bank statements, right? And then what will you do, Oscar, when you get those 24 months? If you decided, you said, hey, I have to take you 12, or we'll use 24. Give us a scenario like that you use, and the same thing probably for 1099.
That's exactly right. So I always suggest collecting 24 months, even though we offer the flexibility of 12. And for those who've just joined us, we still require 2 years in business, even though we offer the flexibility of using the most recent 12 months of bank statements or the most recent year of 1099. Okay, but the reason for collecting 24 months is at lower LTVs, the borrower's going to get a benefit. They're going to see that benefit to the rate, right? Now, what happens is, let's say that you collect the 24 months of bank statements and your client's only been in business for 2 years. Normally, you can see that first year, you know, that first year, they're just starting to build their business. So the 24-month average may be less than that second 12-month average. So what we can do is we can then condense it to just the 12-month option that we offer, as opposed to having to go and ask for another 12 months of statements from your client just to see whether or not they qualify for the 24-month option. We can make that decision instantly within 24 hours.
Yeah, I think that's critical. You know, everyone you really wants to take the less resistance route, right? So, but get us to 24. We're on your side. You know, we always say our AEs are like a confessional booth, right? Tell us everything. Give us everything, and we will guide you down that proper road that's a benefit to your borrower, you, and your referral source. I promise you, when you work with us, you will be in the best hands. So let's, you know, I've got Kelly asking here about pricing. I think Oscar, I think you're taking us to quick call, right? So let's go. So we're going to talk about how to price a loan, which you can do. We don't require you to be approved with us to do a pre-qual. We don't require you to be approved with us to have access to our non-QM quick quote. So Oscar, go ahead.
Yeah, so this is step 1 on the path to a clear to close. You want to visit our homepage. There are 2 places that you can click to get to the non-QM quick quote. This is where you can view pricing, and you don't even need a password. But this is also the first step for you to submit your 1003 credit report. And if it's a bank statement loan, like we're going over today, then your bank statements as well, so that we can calculate the income. When you click on it, all you have to do is fill in the details. There are not a lot. It's very simple, and it's very user-friendly. We actually, I don't want to steal your thunder, John, but we have a colleague of ours, an AE here, whose daughter, right?
Yep.
Sometimes she goes in.
8-year-old daughter.
Yes, 8 years old. So it's so simple that someone in elementary school can use it, right?
Yes.
Very user-friendly. All you have to do is fill in the details. And when you scroll to the bottom, it's going to show you pricing. And so just like we discussed, you have the bank statement elite option, you have the standard bank statement option. When you submit everything, your AE, like John said, is still going to place them in the best option. They're going to review that with you, before even sending you the quick qual, right? To view the rate stack, you want to click on view rates, and it's going to show you the full rate stack. Anything right now we've priced out borrower paid. Anything below 100 is a cost. Anything above 100 is a credit, reducing total closing costs for your client. And to get to the final step where you upload the 1003, the credit report, and the bank statements, you want to select one of these options. This is not locking in a rate. You're just indicating to your AE, hey, listen, I want you to use this rate when you're reviewing the file for DTI. So select one of those rates, click the select option button in blue, and it's going to take you to step 2, which you can skip. To skip this step, click next. And let's get to the last step where you're going to choose your account executive. If it happens to be me or Christy or another AE, then you fill in your info, and then you're going to upload the 1003 and credit report into its folders. And then there's a folder for the bank statements as well. You can drag and drop. Let's say that your client sends you 24 months of bank statements in separate files. You can drag and drop them all at once, and it's going to pick them pick up all of them at once. You don't have to do it one by one. If you did not have the questionnaire, there's a reminder there.
Yep.
And if you click that button, you can download the questionnaire and send it to your client. This can trail. By this point, you've already uploaded the 1003 and the credit report and the bank statements. Send the questionnaire to your customer and go ahead and submit this. And then once they fill it out, make sure that they do as soon as possible because it impacts income. Then send it to your AE. When you're done uploading, hit submit on the bottom right. Wait for it to say successfully submitted, and then you're in line for review. John mentioned
Oscar, please.
that the confessional booth, it's either by phone or you can type it in. Anything that you need to mention, you can mention there in that comment box for your account executive. This is for our eyes only. We want to help you close loans. So yeah, make sure to be fully transparent about anything that we need to know. Because at the end of the day, we're reviewing a 1003 and a credit report only.
Oscar, as I mentioned earlier, 30% of the loans we close don't meet our guidelines, and that's because of what Christy said earlier, a complete 1003, right? If we have a lot of assets, we might be able to get a score exception. If we have a lot of assets, we might be able to get an LTV exception. Anything, NSFs, we'll get exceptions on those because we know the borrower has a good assets, so and I'll do a shameless plug. I think next month we're actually doing a webinar with our credit help desk, and so we're going to go over on what the qualities of loans that we actually get exceptions on. So stay tuned for that.
Hey, John, I want to reiterate, this is the advantage of working with Angel Oak. It wasn't even 9:30 this morning, and I'd already taken 3 calls from loans that had been submitted to friendly competitors of ours where they do not have this process. And you submit your loan, and after you've disclosed, your client has hopes of getting a conditional approval and eventually a CTC, and you've ordered the appraisal, they discover that the loan does not qualify. So, we know that your reputation is everything.
Yeah.
And again, this is an advantage of working with us because your AE is going to review the 1003 and credit before you've requested disclosures, before you've ordered an appraisal, before you've submitted to underwriting. And we're going to say, hopefully, yes, we're going to get this done, or a quick no. And there are compensating factors and we need to get an exception. We do that before even going to underwriting.
Yeah, so a couple of questions here that came in while we were going through the pricing engine and how to submit a pre-qual. All of our loans, none of our loans have MI. So just want to make sure if we go up to 90%, Christy talked about, hopefully you're not in that rate game anymore and you're talking really about affordability and payment. But none of our loans have MI. And then regarding pricing, we showed the pricing engine here. You have options to go either borrower paid or lender paid. So borrower paid, you're charging an origination up front to the borrower, and if you're going lender paid, there's boatload of options regarding pricing. You can either put it all in the rate if that's what you want, or if you lower the rate a little bit, it's going to be charged as a discount to the borrower. So I just want to make sure we clarify that, because it helps in the communication. And any of our AEs are well versed on having those conversations with you. So now, Christy, I know you're getting antsy, Christy. I can just sense it right now, because we're gonna talk about one of the best things that I think Angel Oak provides for, you know, our broker world. I think it's second to none. So, Christy, let's talk about the underutilized marketing portal.
Yes, I know. I always appreciate being able to talk about this because I truly do get excited to talk about the marketing portal. And there's a few reasons for that. One, I just love how Angel Oak invests in relationships with our brokers. You know, that we're here to invest in a relationship with you. And hopefully that becomes a long-term relationship where we're working together. You're learning more about our programs and we're funding more loans together. And we're giving you free.
Christy, you're fading out a little bit there.
Am I? Okay, well,
that's good. That's perfect. There you go.
So anyways, I really love this marketing portal. I love that we invest in that relationship with our brokers and that we're giving you, you know, free marketing material that's going to allow you to build your business. And it's really great for those of you that are just starting to dip your toes, you know, into non-QM, because I say these are a lot of cheat sheets that you can use as you're trying to learn these programs. You're trying to market them to referral sources. Use those flyers as a cheat sheet, you know, stick them up on your wall and you can answer a lot of questions from those. So, John, if you want to log in, we can jump into this.
All right. Now here we're logging in. This is where you do need to be an approved partner of ours, and you will need login credentials. And I'm a hunt and peck here. There we go.
Perfect. So if you want to jump into the marketing portal, you can just pick where you want to start. You want to start with the.
Let's start with the most popular. The most popular of the underutilized. You can
yes.
Yeah. So let's start with flyers.
So the great thing about the marketing flyers is that, again, you can use them as a cheat sheet to really start to understand the programs. And as I mentioned earlier, I think I mentioned, these are, you personalize these. These are for your use. They're not co-branded. You're not going to see Angel Oak's name on there anywhere. This is going to be an opportunity for you. You know, this has obviously been branded for, you know, one of our originators by an AE. They have their logo in the top corner, their photo in the bottom, their contact information. So these are really clean. They provide a good amount of information and they allow you to, you can use these to drop off, you know, to your referral sources. John, I think there's one in there directed towards a CPA.
Yeah. Yeah. And that's,
I think that,
yeah. Go ahead, Christy. Yeah. I just clicked.
Excellent place to start with gaining bank statement loans, because, you know, one thing a self-employed borrower is going to do is really thank their CPA for doing such a great job on their taxes that their bottom line income, you know, is as low as it is. These are savvy buyers. They're taking advantage of the tax write-offs that are available to them. And they're likely to go to their CPA and say, really appreciate the job that you did, but I'm trying to qualify for a home. What are my options? And of course, we don't want that option to be refile your taxes or wait 2 years and lose out on equity. So that's a great referral source. And you can maybe you take a day and drop this off at all of the CPAs or financial planners in your area and, you know, start working on going after that opportunity.
Yeah, Christy, you know, and the beautiful thing is you fill it out once and then you have access to all these flyers here. And it's not having to fill it out. We've had loan officers co-brand these with realtors. You know, maybe it's for an open house. Maybe it's a multi-million-dollar open house. And as we said, it's self-employed people who are buying, you know, those homes. You know, we have another AE out west who says, where can you find self-employed borrowers? He said, open your front door. You will trip over them every day and throughout your life. So, you know, it's pretty amazing. So, Christy, let's talk about, and again, you can see how, these are just little snippets of the flyers that we have. So Let's talk about social media, because if you're not on it, you're being left in the dust, right?
Yeah, and this is a great place, to start as far as if you are a little bit hesitant because you're not overly familiar with these programs. This is a way for you to start spreading the word without feeling like you're face to face with somebody, right? You can start putting out there some information about bank statement loans and, of course, all of our other programs and getting their attention. And getting them to come in. And I think the other thing is y'all wear a lot of hats as an originator. You're trying to originate business. You're trying to manage your referral relationships. You're trying to manage your pipeline. And hopefully this can take, just one task off of your plate. You don't have to think about what your post is going to be that day. You save the image, you cut and paste the verbiage, maybe you add some hashtags to it, you'll change things up to personalize it, but it's going to make it a lot easier for you and hopefully just take one of those pieces off your plate.
Yeah, Christy, and we've, like you said, cut and paste. We have the images here for if you're looking to market to a borrower. We have it for Instagram and Pinterest, Facebook and LinkedIn. We have the content here. I promise you, use this. You will reach new borrowers, the underserved borrower. So, I just think it's a very underutilized area of our website, and I see more people doing it now because they realize rates aren't dropping until probably Q3 next year. So they're like, oh my God, I don't know if I can wait this long. I have to do non-QM and look for these underserved borrowers. So we also, what else you want to cover here? We have whiteboard video.
For sure, the realtor presentations.
Okay.
These whiteboards are great. I think everybody should just take a quick look at them. You can play through them. They give you about 1 minute of information. That's a great thing to share on social media as well. But the realtor presentations are far underutilized. I have several originators that I've done 4 or 5 of those for them this year, and I have others I've offered several times. This is very underutilized. And I think Oscar would probably echo this. We love to do these. We want to do these. We love talking about our programs. We love helping you widen your net, and gain more business. And if you're intimidated, or maybe you don't love the public speaking piece, we're happy to show up and do these for you. And it's a great way to add value. And that's really what the goal is with those referral relationships, is to add value and deepen the relationship. And if you can get them in a room and talk to them about how you can help them grow their business, that's the greatest way to of course add value. So these are personalized as well. John has a lot of funny jokes, and I like to pick up on some of them. And he says that we're in the witness protection program when we show up to do these. I never mention, what company I'm with, what I do. We're just there as one of your investment partners. That we personalize this presentation before we show up with your logo, your photo, your contact information, and we just talk about it, from the perspective of what they get by working with you, what they get by working with an originator that understands and is well versed in non-QM.
Yeah, very well said. So John, Eric, we'll be in touch with you with regards to, Oscar mentioned this earlier, 1099 bank statements. 9%, is it 9%? Yeah, it's 9% of the loans we close at Angelo are realtors. So you get 12, 13 realtors in a room, you're going to get one of their loans, I promise you. And if it's not on a bank statement loan, it's definitely going to be on a DSCR, debt service coverage ratio loan. So I promise you, you get 12, 13 realtors in a room, you will get one of their loans. The odds are that's going to happen. And as Christy says, they're going to go to you anytime they get a borrower, because they know you have an assortment of programs and investors that can help them move more inventory. So, Oscar, anything extra regarding our marketing?
Well, specifically about the realtor presentations, I wanted, I want everybody to walk away with probably the most successful pitch I've ever heard a loan officer use when they make a cold call to an office that they want to present to. So, if you want to take a mental note, this is going to be recorded again, or if you want to write this down, I promise you, if you do this by the end of the year, you're going to get bank statement loans. The best pitch I've heard, call on an office, and request to schedule a call. Before you do that though, take the average purchase price in your market, take the average percentage that a realtor owns on a, when they close a purchase, and then the amount of months left this year. Multiply those, okay? And then, oh, my light just turned off. Once you have that, what you're gonna do is you're gonna make this call and you're gonna introduce yourself and say that you would like to present to all their agents to teach them how they can grow their commissions by, let's say, $30,000 by helping one non-QM buyer by the end of the year. I promise you, nobody will turn you down and say, no, I'm not going to let you teach my agents how they can grow, how they can make more money. In fact, they may take you out to lunch. So that is the most powerful pitch I've heard. And you can have those in person, but we do have access to Zoom as well. So, if there are sometimes, barriers to people, that people come up with excuses not to show up to an office at times. So what you can do is you can also schedule a Zoom call. You just let your AE know the date, the time, 2 business days in advance. We'll schedule a call with you personally. We're going to go over this realtor presentation. We'll go over the points together, what we're going to cover, what we're not going to cover. And then we're going to have this Zoom link prepared for you, and we can present online as well. And that typically you'll see more attendance that way. And it's less money out of your pocket. Again, we're not going to charge you for it, completely free, and you don't have to buy lunch for everybody.
Yeah, Oscar, great point. I mean,
Yeah.
it's so, I was out in Fort Worth about a month ago with one of our A's here locally, and we did it to an office of about 7 to 8 realtors, and it went over well. The loan officer has been engaged in conversations now with all those realtors. So it's a very, very, very powerful presentation, and it's very underutilized, and it's really like Oscar said, it's a way to get momentum for the rest of the year and into 2024 as you being the go-to loan officer. So Oscar, in closing, anything else you want to add?
Well, we talked about the opportunity. About, what was it, 65% of you have not done a bank statement loan yet. Just apply that to your own market, right? Okay. Make sure to use the social media content that we provide, the flyers, post it on Facebook, get the word out, schedule presentations. And if you don't know who your account executive is, I implore you right now in the chat box that we have, go ahead and mention that you would like to contact your AE. Or reach out to John J at angeloakms.com. And we're going to make sure that your account executive, if you're not assigned, that you are, and that your account executive reaches out to you.
Christy, anything else to add?
Just thank you. Like, we really appreciate, we know your time is valuable, and we really appreciate all of you just coming on here today and giving us an opportunity to talk to you about our products.
Yeah. So, again, thank you, Christy. Thank you, Oscar. You're pros. So I really appreciate you guys taking the time out of your day. In addition to our entire audience, thank you for taking the time out of your day to learn about, the quality that Angel Oak can provide you, the products that Angel Oak can provide you, and help you close more loans. For those of you who have closed loans with Angel Oak, we appreciate your business. For those of you who have not, give us the opportunity. There is a short survey here afterwards. We're always trying to improve what we do on these webinars to help bring actually good content to you. So again, I'll put up my, I don't know if you can see it. Yeah, can you? Yeah. So yeah. That's my contact. This is recorded. This was live. We will get this out to you by Monday. Unfortunately, we had some technical difficulties with GoTo, so we will get this out to you by Monday. But if there's a urgent question that you have that you need answered right away, call me. If you need to find your account executive, call me. Email me, johnj at angeloakms.com. My number is 214-683-6096. So for everyone participating today, thank you very much. Have a great rest of the month and year. And again, Christy, Oscar, really appreciate you guys.
Thank you.
Thank you, everyone.
Have a great day.